let's see if I got this right. I think, yeah, so typically when you associate the brand with Nasdaq, you think US, you think big, you think large, and you think this is the lifetime goal of many companies, and hopefully the lifetime goal of many companies. And clearly, we've been very successful in the clean tech space and the whole eco-technology space, most recently, of course, with SolarCity and Tesla and many others and so on. But the fundamental issue is, and you see that from a market perspective, of course, the index on the Q Green Index, as we call it, has performed quite well most recently. And I think of this, of course, creates a lot of interest for this particular space and for companies like you and being able to invest in companies like you. But typically when you think about IPOs and you think about exchange, you're thinking about a company that is 300 million euros in size, at least, a minimum, I think. And you're looking at raising a lot of capital, and you're thinking about a very complex process. And really what I mentioned before is that in the Nordic markets, especially in the Stockholm market, you have a fundamentally different ecosystem. With 80% of the population owning shares, every day in a household, you're discussing return of investment based on owning equity. And the future is, of course, being able to own in companies like yours. So when we were approached to host or to be a part of this event, we thought it would be great to host this event at our space. I'm sure you will enjoy it as a space, but it's also becoming a very relevant market for this sector particularly, because out of the 94 companies that listed on Nasdaq Stockholm last year, a large part of these were in fact tech growth companies in this sector. And so what you have, we were talking about Sweden before, you're talking about an equity culture, a very dynamic market, an ecosystem of advisors, investors that are focusing specifically on smaller companies. So you have everything from a company of 7 million euro size looking to just list its company because it has a large investor base and they want to provide liquidity to that company, and maybe raise 1 million euros. To a company of 200, 300 and everything and above, raising 50, 60 million euros or even more. That's the size of companies that we're seeing come to the market in this space, in different sectors, but being able to create a liquidity and get access to a public market, which of course gives you a lot of other different values. And the interesting thing is that if you look at the Nordic markets, it's also been a very high performing from an investor point of view, from an equity point of view. And if you look at the indices here, the yellow one is what we call our Nasdaq First North. This is our growth market, which has lower rules, lower requirements, and so on. This has been a very high performing index over time since 2015, this graph is measuring. And it compares to the overall index, which is the Nasdaq First North. So the Nasdaq First North 25 is the top 25 most liquid shares on First North. And then you have the blue one, which is the First North index. And then the light green one is the AIM 100 index, AIM being the London growth market. And then below there, on the dark green, is the main exchange. So what you're seeing here is not only companies coming in to access risk capital, but you're also seeing a fantastic performance from a portfolio point of view, reflecting not only that they're a growth company, but they're also creating value, shareholder value. And if you look at, from a Nordic perspective, just again to introduce you what you're traveling to in September, is that last year, the Nordic exchanges were the most active exchange in terms of number of IPOs. And behind that was London with 67. And these are IPOs in terms of raising new capitals. We actually had 94 listings in total, but they did not all of them raise capital. And then below you have the amount of money that was raised in total in the markets. And again, this was a unique year because we had Dong Energy, of course, also in this space, which raised a lot of money. But most of these were created by smaller companies, raising a lot of, raising capital. So many small companies raising smaller amounts. But what is more interesting in this graph is how dramatic the difference is on a European level. When you see how it quickly goes down to a smaller size. And this is fundamentally, based on the analysis that we've done, is that the culture in the Nordic markets is equity driven. So households own shares. In the rest of Europe, it's debt-driven. So households do not own shares on an average. And this means that there's no ecosystem built up around these companies or around these investors to be able to support them. And this is really fundamentally a key driver for companies being able to access the market at a lower level. There are no investors, there are no advisors, and there are no funds investing in these smaller companies to give them support in the public market. And again, here you see the performance. And it's not that the first company that listed did this well and so on. We've just ranked them in terms of overall performance. But you see, on an average, they have performed quite well. It's not all of them have performed fantastically well. But you also have to keep in mind that this is since the day they listed. But these are long-term cycle companies, many of them. And the blue one is the First North market, is a growth market, stood for roughly 70% of all our listings. And the gray one is the main market. So keep in mind, these are companies that are not raising capital and creating liquidity from day one, but probably 12 to 18 months down the line want to raise more money. And this is where the secondary market becomes very important, and the marginal cost of being listed becomes a very great asset for them to be able to access new capital over time. And we've had a substantial number of Nordic tech listings, but these are more traditional tech. I haven't included clean tech here, Ecosummit, and these are overall performance of these. And then you also have, on the First North market, you have the possibility to raise bonds as well, which is also an interesting asset. So you basically, as a listed company, you've gone through the whole due diligence as an additional way to raise capital without diluting your ownership base. You can then access funding through a bond. And this is a typical timeline. The timeline that we see for a company accessing First North can be everything from 2 to 9 months, or even 12 months, depending on how complex it is for their particular company. But overall, in the Nordics, it is a fairly high governance standards, and companies are fairly well prepared. But if you already have a VC, you've probably gone through a lot of due diligence already. So from that perspective, you probably are more prepared than you think in terms of accessing that market. So what we're doing right now, and this is another example of a company called Cleantech Invest, raised roughly 11 million euros, had a valuation of roughly 20 million euros at the time, is now trading at a valuation of close to 70. Again, of course, not all of these examples are as fantastic as this one, and I'm just trying to give you an example of a smaller company that they don't have to be so large in size. Here's another example, PowerCell. You probably know that company. They raised roughly 11 million as well. They have a market cap on the day of listing, which was 25 million. They're now trading at a value of 160 million, and they have roughly a 2,300 shareholder base. And it was a spin-off of Volvo Group. Again, these are all good examples. It's very easy for me to come and show all the good examples. There are some examples which have not done that well, but what you have to keep in mind is that many of these companies go through the different phases of development. And overall, what we've seen is that the public markets, especially Nasdaq First North, since it doesn't impose so many high standards on the companies, therefore not so costly to access that market, over time, these companies have the chance to develop and basically succeed. And typically, the companies that we're now approaching outside the Nordics are the growth companies in the biotech sector, in the tech sector, in the healthcare sector, but also, of course, in the clean tech and the eco sector, because we feel that this could be a potential market, since there's nothing like it in the rest of Europe, and especially now with Brexit and London being a bit more chaotic, this could be an alternative for many companies. So again, what we're encouraging companies to do is to reach out to us, have a discussion with us, because it does not only have to be the US in the long run, but it could also be an interesting alternative to raise capital and potentially leverage Nasdaq First North. So you'll be, in September, you'll be in our facilities. We look forward to hosting you there. It's going to be a fantastic event, and we'll have the opportunity to discuss this, of course, if you want, and probably there will be many companies that are already listed on Nasdaq First North there. But again, it's probably interesting to know that Nasdaq is not only in New York, but also in Stockholm, and you're more than welcome to reach out to us to discuss this with us. And potentially beyond capital, you also get visibility, you also get the equity, you also get the possibility to develop an alternative strategy for your further growth. Thank you very much.